For more on the markets, I'm joined by Portfolio Manager at Otto 1890, Muhammed Wagley. Muhammad, a very good afternoon to you. Thank you so much for your time. Let's start with the market open. How have global and local markets reacted this morning as we assess what's driving sentiment?
Hi, Paul. Good afternoon to yourself and to your viewers. Always a pleasure to be on. Well, it's an interesting one because, you mentioned this earlier, but we've seen that the all shares actually responded relatively well. We're up today and, I don't think we started that way. So, we've played a bit of catch up this morning relative to sort of the bloodbath that we saw in the US yesterday. That's quite good. If we cast our mind over to Asia, I think Korea in particular has had a tough one. It's actually been a tough couple of weeks there, just as we see, those massive memory chip manufacturers start giving up some of those gains that they've been having for the past year and a half. So yeah, there's lots of concerns. You did touch on this, in relation to some of those semiconductors and really AI adjacent sort of chips. But, we're not necessarily seeing that reflected over in Europe or back home here in South Africa. We're actually seeing some decent movement on the day. And I think at least with reference to what we're seeing locally, we're getting some good numbers out of the resource space. And I think that's really helping us, perform a bit better on the day.
The Federal Reserve Bank has decided to hold interest rates steady in trying to assess, the outcome. Did Chair Kevin Walsh strike the right balance?
Yeah, so look, this was absolutely the big news of the day yesterday. I think going into the week, this is what we were really sort of keeping an eye out for. The consensus going into it was that, look, he's not going to cut rates or rather hike rates, and we're expecting rates to be held steady. A lot was going to be made of sort of the discourse around it and how many dissenters were there. I think very directly in terms of your question, I do think he has struck the right balance. What this does is it makes September sort of really live. I think it's opened the door for a hike in that meeting. But if we look at sort of the market reaction, leaving aside all of the AI tech malaise that we're seeing, it's clear that the market was hoping for a bit of a rate hike. It seems that those fears around inflation are permeating through the market. But in terms of sort of the tack chosen by Kevin Walsh, I think he's been very deliberate. Like, yes, a bit coy, you can say, on details and things like that. But ultimately, I'd say that he has struck the right balance.
So what would you say the prolonged pause by the Fed means for emerging markets like South Africa, especially considering the rand and capital flows?
Yeah, no, look, it's a very good question, that. So I think one has to consider now that the expectation is for those rates to be increasing in the States. It may not have happened yesterday, but the likelihood is that that's going to come around in September. So in a nutshell, a lot of those sort of flows that would have gone toward emerging markets, for those sort of more attractive yields may now be more likely to stay at home over in the States. So in effect, it's sort of competing with those emerging market yields. And obviously that stands to have a bit of a negative impact on us. We'll see that impact the rand in particular. It has been volatile for the past couple of days, probably a couple of weeks as well. And I'd imagine, as long as this sort of hawkish tone from the Fed remains the same, we'll see that volatility continue in the rand. And then I think, more broadly speaking, this is going to impact how the Reserve Bank is looking at sort of their next policy decision. And I imagine they'll have to be a little bit more cautious and deliberate about that as well.
Absolutely. Let's turn to company news. Anglo-American reported interim results as it continues its portfolio restructuring, while also at the same time discussing a 16.7 billion rand deal to sell its De Beers diamond business. The mining giant, is becoming a very different company. Are investors buying into the transformation story?
Oh, absolutely becoming a different company. I think a lot of this transformation starts on the back of BHP looking to make that acquisition. I believe it was at the start of last year. And then, they underwent, quite a substantial transformation, doing away with sort of the businesses that weren't necessarily profit generating and moving or pivoting rather towards their champion businesses. And this De Beers news is much of that. Now, if you look at the price they got, you mentioned 16.7 billion rand. That's, $1 billion, give or take. If you cast your mind back to 2011, Anglo American bought about 40% of the company. for substantially more than that. I think they paid about $5.1 billion. So in terms of the price received, it's not spectacular, but I think what the market really likes here is that they are doing away with this loss-making business, and potentially putting those funds towards part of the divisions that are actually succeeding. The main superstar here is copper, and that was sort of the big story when the transformation sort of talks started. So in that respect, like it has materialized well. Investors are very, very positive on this. And yeah, it looks like the company is quite a bit leaner and I guess a bit more ready for the future in many ways.
Very well. Thank you very much for summing that up for us. Portfolio manager at Otto 1890, Muhammed Wagley, giving us a sense of what is essentially moving the markets and the latest developments in the world of business.